The information provided in this program is of a general nature and is not intended to be personalised financial advice. We encourage you to seek appropriate advice from a qualified professional to suit your individual circumstances. Spark's boss is promising to invest in its cell network after the cyclone. At the same time, it's returning $350 million to investors. And rates, they're still rising. We ask an expert when the Reserve Bank could call it quits on its aggressive hiking cycle. It's Friday the 24th of February and you're watching Markets with Madison. Well, no cell service was a reality for many regions following the cyclone. 150 of Spark's cell towers were unusable for a few days due to damage or no power being available to run them. The telco announced a big lift in its half-year profit this week after selling a majority stake in its cell tower assets. Its chief executive says it's committed to helping make the network more resilient, but it shouldn't be on the hook for the whole bill.
So I think there's some things that we need to look about. What can we do within our own industry, but who else do we need to work with? Because if you think about fibre, for example, that generally will follow roads and bridges. And so when we see devastation across those, it's thinking around, as we rebuild, where are the right places for that and how do we make sure that we put more resilience overall into the networks?
What could some of those options to make it more resilient look like?
So I think I've touched on some of those. So for example, battery life, longer battery life may be one of those ways. Generators, more generators potentially in a or decentralised area. So for regional, it may be that it's with civil defence or others in order for them to be able to support a community. We've seen various forms of communication tools used, so satellites as well play a role. But like all of them, they are reliant on power. So the reality is it's thinking around how do you get power to remote areas if there is long-term problems like that.
Is that resilient, the fact that the whole system is reliant on power and a bit of diesel for generators?
I think when you stand back from that, what we have to then consider is how do you add things that add to that resilience, and how do you make sure that you are, for areas that may not be easily accessed, how are you putting things in place? And generators do play a role. They can provide power in those times. Ideally, we'd like power infrastructure to be up as well, but when we saw the effects of the storm that we did, or the cyclone that we did, I mean, that was severe a weather event in terms of that impact.
How long could a rebuild or a refixing of the network take, and how much could it cost?
Look, as I said, for our network, we haven't seen a significant impact in that. So when you think ahead of the cost of rebuild, I can only really go on what the government's talked about so far, around that $13 billion in terms of that. So that's significant, and that would be over time. I think the opportunity, though, is for companies like ourselves, and as I said, in terms of working with our power colleagues, others, and the government to think around in that rebuild. Are there different ways that we would do that? Are there things that we need to be considering that would help to make communities more resilient?
You say colleagues and the government. Would you like to see a cohesive model, collaborative model in terms of paying for making the network more resilient?
Look, I think no one company, no one sector can look to fund that, but across with a very clear plan, I think, and working with government, there is an opportunity to think around how would we invest with everyone playing a part.
I want to ask about your partial sale of some of your telco assets. You recently sold down 70% of your telco tower assets. How much of that capital are you going to return to shareholders?
So we're returning $350 million of that capital through a share buyback. We're also investing the same amount in the business in terms of digital infrastructure and growth. So we've made sure that we've got that even balance there.
Is now the right time to be investing in growth when the network, as you've mentioned, isn't as reliable, arguably, as it could be?
Look, I think from the network perspective, what I would say is we didn't have any infrastructure failure in the network. What we do need is more resilience around power, and so we've definitely focused on that. And investment in growth is also in digital infrastructure, which is really all part of that network. So when you think about that, and each year we'd spend $100 million of capital on resilience, so in our network. So I think from that perspective, we are investing heavily.
Looking at your half-year result for the period, revenue was up thanks to largely mobile, but your margins are coming under pressure due to higher costs. Are those costs going to be, or have they already been passed on to consumers?
Look, if you think about where we saw pressures on cost, obviously in fibre, where we had a regulated input cost increase. We have already passed on that price, and that we'll see that more in the second half. In mobile, what we have looked at is more around where is it where plans were having changes made anyway, was that the right time to put through price? We're also very focused on making sure that we have a range of plans, both through our Skinny and Spark Browns, that offer different levels of service and price so people have a choice. And we're very conscious of the inflationary environment we're operating in and the communities that use our services are operating in.
I want to ask you quickly, Jolie, about Spark Sport. You're effectively selling that sort of at a loss to TVNZ. How much money over the lifetime of that project was poured into it?
We've never disclosed that and don't intend to now. In terms of exiting sport, we've created a provision of 52 million, which looks to content rights out for the next 4 years. When we entered that market, we had a higher ambition than what we obviously were able to achieve. But a couple of things have changed since we entered that market in terms of, firstly, we've seen the content costs grow exponentially. We've also seen different competition globally increasing. So from our point of view, when we looked at that and we looked at the opportunities across the rest of our business for where we could make an investment, we made that choice to close Spark Sport.
Ultimately, was it worth the time and money spent?
Look, when you stand back from it, we didn't achieve the ambitions that we wanted to. However, in saying that, the teams that created the service, the work they did, the production, the commentary, we had an excellent service. We just didn't scale it to us because we would have liked to.
Thanks so much for your time, Jolie. Appreciate it.
Thank you.
4.75%. That's our new official cash rate. Some economists thought the central bank shouldn't go through with the hike this week after the cyclone, but it did, noting it was important because prices would rise as a result of the damage.
As the Governor mentioned, we anticipate some price spikes in essentially things that have been destroyed by the cyclone and need to be replaced quickly. So used cars, I guess, would be an obvious example. Appliances that have been in water and subsequently destroyed. Furniture, furnishings, carpet, that sort of stuff. We're expecting to see price hikes in that over the coming weeks and months. And can I just add, it's really important that people and businesses don't use that as an opportunity to increase real wages or real profits off the back of this disaster. Otherwise, that will just embed inflation in our economy and equal higher interest rates down the track.
The OCR is expected to peak at 5.5% at some point this year, but the Reserve Bank says that mortgage rates shouldn't actually get any more expensive. Milford investment analyst Caitlin Parker explains.
If you're going in today to a bank and you're going to fix your mortgage for 1 year, the market wholesale rate that the bank will be looking at, that will already take into consideration, the projected OCR increases. So, for example, that 1 year rate, that's about 5.5% today. So the OCR is 4.75%. So why is that higher? And the reason that's higher is because it's taken into account the future OCR hikes that's going to come in the next 12 months. So essentially, you're locking in a rate today that's incorporating those OCR increases.
If we already have the peak projected into the price then, how much pain are mortgage holders currently feeling, and could it get any worse, or is this about it?
Usually, when you're coming towards the end of a hiking cycle, you would expect that your forward rates, your wholesale rates, 1, 2, 3 years the risk would be to the downside, so they'd have downward pressure. However, this inflation that we are experiencing, it is a massive issue. It remains high, and the key risk is that it's going to stay extremely high. And on top of this, with the tragic recent events, they're also going to put further inflationary pressure on. So as it stands, there is risks both to the upside and the downside. And this was something that Adrian Orr did highlight as well yesterday.
Adrian Orr also took a little bit of a swipe at banks over their savings rates. The average 6-month term deposit rate is around 4.6% at the moment, but the average 2-year fixed mortgage rate is more like 6.8%. Why has the increase in savings rates not met the increase that we've seen in mortgage rates, and is that fair?
If you look at your term deposit rates, they have been increasing in line with the underlying wholesale rates. However, the margin, if any margin, is still at historical lows. And the reason for this is a lot to do with the FLP program. And in terms of that, the banks, they're very well supported and funded with cash. They don't actually need to go out and compete for that money.
Our economy is still expected to tip into a recession at some stage this year. How hard or soft of a landing could we be in for, Caitlin?
Yeah, like the Reserve Bank are currently forecasting that it's going to be a relatively shallow and relatively quick recession this year. I think 3/4 of negative growth that they're expecting. But this is a problem that we're facing globally, hard landing versus a soft landing. A soft landing is extremely difficult to navigate. And we have a lot of problems here in New Zealand. House prices continue to decline, labour market shortages, small businesses, they're already struggling and now they have further minimum wage hikes to put through. So, a lot is still to play out and time will tell, but there are definitely risks that we do experience more of a harder landing here in New Zealand.
We'll watch, worry and wait. Thanks so much for your time, Caitlin. Appreciate it.
Thank you.
Air New Zealand is making a killing post-COVID. The airline released its half-year result yesterday. Its revenue surged 177% on the previous half to more than $3 billion. Earnings, they've turned around from a previous loss to $299 million. Bottom line, it's officially back from the brink with a profit of $213 million for the 6 months to December. Here's what the Chief Executive, Greg Foran, had to say yesterday.
International visitors are back travelling, and we've also seen some of that demand contributing to domestic bookings. In addition to booking strength, our forward domestic sales are above pre-COVID levels, reflecting domestic fares that are, on average, about 25% higher and take into account the higher cost base that we are facing into. While we are always closely monitoring customer demand, we have not observed any signs of softening to date.
And in case you missed them, here's some other results from this week. Auckland International Airport saw a large drop in profit in the half after the valuation of its properties fell. Same story for Precinct Properties, the commercial office owner. It made a much smaller profit, only $600,000. Sky TV reduced profit there too. It also announced it was cutting up to 170 jobs this week. NZME, owner of the New Zealand Herald, profit down by a third to around $20 million. No job cuts there though. Touch wood, I only just got here. The chief executives of Sky Television, Sophie Maloney, and Precinct Properties, Scott Pritchard, are both on Monday morning's show, so stay tuned for that. Now go put your money to work.
Thanks for checking out our YouTube channel. To stay up to date with all the latest news from the New Zealand Herald, click the subscribe button below or check out one of the videos here and head over to nzherald.co.nz for more details on these stories and more.